Hi, welcome to Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Only, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. And here at Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, something just happened with XRP. And at first glance, it looks straightforward. Price moved, traders reacted, social media lit up. But the deeper story may be a lot more important than the move itself. Because right now, XRP is doing something that forces a bigger question. Why is price moving before some of the bigger pieces fully line up? That's what makes this moment worth paying attention to. Because this may not just be about momentum. It may be about the market reacting to a structural shift that still isn't fully visible yet. And when price starts to moving before the full story is obvious, that's usually when the smartest people stop chasing candles and start paying much closer attention. Stay with me, because this move may be saying more than most people realize. Ladies and gentlemen, welcome back to the Crypto Republic. Today we're talking about XRP, but not in the shallow surface level way most people do when a chart starts moving. Because yes, XRP moved, thank the Lords. But that alone is not the story. The real question is whether the move is actually signaling something bigger, a change in structure, a shift in market behavior, or growing pressure around a setup that broader market still doesn't fully understand. And that's where this gets interesting, because when you take a step back and look at the full picture, Bitcoin, Ethereum, XRP, sentiment, regulation, and institutional timing, you start to see that this may be one of those moments where price is reacting first while the rest of the market is still trying to figure out why. That matters. Because in markets, the people who usually get hurt are the ones reacting to the loudest movement. The people who tend to stay ahead are the ones asking what the move is really connected to. Remember, we always say short-term noise, long-term structure. That's the lens for this entire video. I just want to say thank you to everyone that takes the time to like, subscribe, share, and comment with these videos. These things really do help the channel grow very much. And with that being said, let's dissect today's content, and I hope you like the video. Today, we're going to look at XRP in a different way. Not in the lazy surface level way, not in the green candle means everything is solved way, not in the headline chasing, emotional retail panic way. We're going deeper than that because XRP just moved. And yet, when you really step back and study the structure, the market environment, the Bitcoin leadership, the Ethereum confirmation, the regulatory timeline, and the institutional backdrop, you start realizing something very important. This move may matter, but why it matters may be completely different from what most people think. And that distinction matters because in markets, the people who win are usually not the ones reacting to the loudest moment. They're the ones who understand what the moment is actually connected to. Short-term noise, long-term structure. That's the game. So today, I want to walk you through this in the right way. We're going to zoom out first, then zoom in. We're going to talk macro, market structure, Bitcoin, Ethereum, XRP regulation, the Clarity Act, institutional behavior, risk management, and most importantly, what this moment may be telling us historically. Because sometimes price moves before the public understands the story. And sometimes price moves before the story is even fully written. But here's where it gets interesting. The tension right here between movement and confirmation is exactly where some of the most important setups in the markets are born. Let's start with the obvious. Yes, XRP moved. Yes, traders are watching it. Yes, there's momentum building around the chart. But a move by itself is not the full story. A lot of people make this mistake. They see movement and immediately assume resolution. They see movement and immediately assume resolution. They say green and assume certainty. They see speed and assume validation. But markets don't work that way. Sometimes a move is the beginning of a trend. Sometimes a move is the front edge of a larger structural shift. And sometimes a move is simply the market pressing into a decision point. That's where XRP is intersecting right now, because this isn't just random. This is happening at a point where the chart, the broader crypto market, and the regulatory backdrop are all leaning into each other. And when those things begin to converge, the market stops being a clean technical exercise. It becomes a layered puzzle. Now, this part surprised many people. A lot of market participants still treat crypto like it's a disconnected casino, as if XRP can just move on its own, completely separated from Bitcoin, separate from Ethereum, separate from policy, separate from institutional behavior. That's not how this works anymore, not at this stage. Crypto has matured enough now that the bigger names in the market are now tied to broader frameworks, capital flows, macro appetite, regulatory digression, and infrastructure narratives. That means when XRP moves, you can't just ask, did it pump? You have to ask, why is it moving here? What is it reacting to? Why is it confirming this? And what is it still missing? That's the question, is the one I think matters the most, the last question, because something still doesn't fully add up. Price is reacting. The system is evolving. And those two things do not always move at the same speed. Now let's zoom into the chart logic without turning this into a robotic technical lecture. The setup many traders are watching is actually pretty simple in concept. You get a strong push upward that tells you buyers are willing to be aggressive. Then you get a pullback. That pullback matters because it shakes out weak hands, tests demands, and forces the market to reveal whether the move had any real substance behind it. Then comes the critical phase. Can price reclaim strength and break through resistance in a way that actually holds? That's the difference between a real structural move and a temporary emotional burst. And right now, XRP is sitting right in that uncomfortable but fascinating zone. It already tested support and it held. That matters because when price comes down to an area that should break and doesn't, the market is telling you something. It's telling you there are still buyers there. It's telling you that demand has not vanished. It's telling you the move is not dead just because momentum cooled off for a minute. Let that sink in. This is very important, ladies and gentlemen. But here's where it gets interesting. Holding support is not the same thing as confirming a breakout. That's where people get trapped. They see the support hold and immediately start behaving like the entire story is complete. It's not complete. It's developing. The real question is whether XRP can push above resistance, hold above it into the close. And the word hold matters more than people realize. Markets touch levels all the time. The strong markets are the ones that accept those levels. A weak market can spike. A strong market can sustain. That's the distinction. And that is what most investors are missing. It's not enough for XRP to tag a level and get everybody excited for 17 minutes on social media. What matters is whether the market is willing to live above that level, whether buyers are willing to defend it, whether the prior resistance can begin to act like support. That is how structure changes. That is how hesitation turns into participation. That is how a move stops being a rumor and starts becoming a trend. One of the most important ideas in the same logic is that once these kinds of conditions start lining up, the market can become very sensitive in a relatively short window, roughly a 3-candle, 72-hour type of period, depending on the time frame you're using. Now, that doesn't mean magic. It doesn't mean guaranteed fireworks. It means the market enters a zone where confirmation or rejection can show itself quickly. What happens next is not about guessing. It's about observing. Because once the structure reaches this stage, the market tends to reveal its intentions faster than usual. Now, let's talk about something most people ignore. Even strong setups fail. Even clean structures break. Even high probability scenarios don't always play out. That's why risk management matters. This is not about being right every time. It's about managing exposure so that when you're wrong, it doesn't take you out. And when you're right, it compounds over time. Not financial advice, just my opinion. That's the difference between emotional traders and disciplined operators. Ladies and gentlemen, not all assets move the same. No asset moves alone. Bitcoin still leads. Ethereum confirms. And when both begin showing strength on higher time frames, it creates an environment where altcoins, including XRP, can follow. Right now, we are seeing signs of that alignment beginning to form. And when alignment happens, probability improves. Crypto is no longer just charts, ladies and gentlemen. It's regulation, policy, institutional access. The Clarity Act conversation is not background noise. It directly impacts how institutions engage with this market. And institutions need clarity. They don't move into uncertainty with sides. So timing matters. If regulation aligns with structure, the impact can accelerate. If it delays, the move can slow. So where does that leave us? XRP moved. But the move alone is not the signal. The signal is the context around the move, structure building, sentiment shifting, market aligning, regulation pending. That combination is what makes this moment different. Short-term noise, long-term structure. Pay attention to what's quiet, as I always say. Price is reacting, the system's evolving. So now I want to hear from you. Do you think XRP is just making a short-term move here? Or do you think the market may be reacting to something much deeper that still isn't fully obvious yet? Drop your thoughts below. If you got value from this, hit like, subscribe, and join the Wolfpack. Stay sharp, stay disciplined, stay Gucci, and don't get cut up like sushi. Happy Saturday, everybody. Hope you're enjoying your weekend. Have a lot to go over, a lot to talk about. Be very exciting. As always, ladies and gentlemen, remember, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and, more importantly, how to actually position around all of this, please do come and join over 500 active traders and investors inside the Crypto Republic desk monthly. And welcome all the new members. Ladies and gentlemen, part of the trade craft I learned on the floor of the New York Mercantile Exchange and being a financial mercenary is really how to read in between the lines. Yesterday, I was talking to a family office, and we actually dropped some of this in the previous video. The market's now being killed by 1,000 financial headlines. Again, we're going to be opening up a topic inside the Crypto Republic Desk Monthly called the Financial Arbitrage Headlines. These are things that we give out to family offices and funds of funds to our members there now to take advantage of this for people that sign up for the year, because they have a longer time horizon. But I want to go over something with you. And this is how we're seeing this. And again, this is where you have to see through the news and have that Gucci conviction, that clarity, why we're the remora, and why that we keep our position sizes small. And all the things that I've been ranting and raving about, the east and west side of the tranche, about what's really happening. So I want you to stay with me right here, right now. And this is why I got that Gucci clarity, that Gucci conviction. And to us, again, this is no surprise. If you're new here, welcome. The videos have a rant after the first part. This is where you get the candy from the Italian ice. So welcome. But ladies and gentlemen, it seems, at least to me, there's a growing rift inside Iran. The politicians, the diplomats want one thing, and the IRGC wants another. The diplomats are the ones negotiating, and the IRGC is relenting. This is not any special analysis. The conflicting news flow suggests this is being at least a probability. There's two people talking right now. One of them's going to lose their job. You know, either Mr. Saeed Abbas Arashi or Jalef. We have an idea which horse we're betting on and what's going to happen. But one of these two men is going to lose their job. Again, we believe that this is a strategy by the U.S. to create internal division inside of Iran. Again, the more it plays out, we're starting, and this is not financial advice, it's something that we believe, and people will see it in the financial news arbitrage section of the Crypto Republic Desk Monthly. But the more this plays out, we believe a coup could potentially be talking. There's a reason why some of these men that are negotiating, especially the horse that we're backing, is still alive, and everyone else seemingly that was at meetings on February 26th is not alive any longer. Again, I want to point this out to you. 760 million short on oil was placed 20 minutes before the Hormuz announcement. This is the third time we pay attention to these things. On March 23rd, a 500 million short, 15 minutes before POTUS delayed Iran strikes. Oil dropped 15%. April 7th, 950 million short hours before the U.S.-Iran ceasefire. April 17th, 760 million short 20 minutes before Hormuz declared open. The CFTC is investing all of this. Ladies and gentlemen, we took advantage of this in our financial news arbitrage that we released. We're going to be opening this up to the Crypto Republic Desk Monthly members again on a yearly basis, because you need time. But these are the things that we pay attention to that the rest of the world is just not paying attention to. And this is where you make solid gains, not financial advice, just our opinion and something that we use on a day-to-day basis when this happens to take advantage of. But listen, the peace trade was sold to retail, okay? Someone else got out first. Who knew? You got to ask yourself why these things are happening. You got to understand there's ships over the weekend being fired upon. There's reasons what's happening, why we were going back and saying, I can't believe tweets moved the markets. But they are. And if you know how to piece this together and you're here watching this right now, you're where you belong. Because understand this, the gas wars just shifted. The United States is now the #1 global gas producer. Russia is constrained. Iran is geopolitically locked. Qatar, critically LNG exporter. Now add reality. Qatar is losing 17% of LNG exports. Production's damaged. Hormuz disrupted. That's not a small outage. That's a system shock. What happens next? Asia scrambles for cargoes. European bids aggressively again. Spot LNG explodes higher. And who benefits? The U.S. We went over this again. We told this whole situation made the U.S. LNG system and the Golden Passage train system. We went over this in Tips in the Pits. We went over this in other videos. Largest producer globally is the U.S. now. Flexible LNG export system. Able to redirect cargoes fast. Qatar disruption equals global shortage. U.S. response, price settler. Gas is no longer regional. It's fully geopolitical. Are we entering a world where U.S. LNG is the global energy stability? We think so. 97% of Iran's oil goes to one country. Ladies and gentlemen, this is very important. And everyone who joins the Crypto Republic Desk Monthly will get access to the financial news arbitrage on a yearly basis, because what I'm about to say right now is how institutions, funds of funds, sovereigns are playing this. Again, I learned this from the best before the New York Mercantile Exchange, and it's why people retain us in any capacity. Ladies and gentlemen, stop and think about what I'm about to say. If 97% of Iran's oil goes to one country, that country isn't the United States, it's China. And suddenly the entire Hormuz story looks different, huh? Think about what Trump actually controls right now. China's oil supplier, 75% of China's Middle East oil through Hormuz, secondary sanctions threatening Chinese banks. 0.7 trillion Chinese-held U.S. debt still being serviced. U.S. exports record 12.7 million barrels, replacing every barrel. This was never just about Iran's nuclear program. It's about who controls the petrodollar in a world racing towards de-dollarization. Iran collects tolls in Bitcoin. Russia trading oil in rubles and yuan. You have U.S. officials admitting sanctions lose power in 5 years. Gold at all-time highs, the market's voting on fiat. The petrodollar system was at risk, and POTUS just reminded the world who still holds the energy gun. Gold knows it. The bond market knows it. President Xi knows it. Ladies and gentlemen, this is what's going on and why. And when you piece it together, most people are paying attention to daily charts, understanding the news that's going to influence not the daily chart, not the weekly chart, the monthly chart and the yearly chart is the secret to success here. Look, on March 10th, hedge funds were net long NYMEX Palladium by 362 contracts. On April 7th, they were net shorts, 2,541. That's massive. So in between, the preliminary AD dropped 132% under adverse facts available. No Russian producers contested it. No U.S. consumers besides BASF opposed it. 4 separate statutory catalysts now laid between 27 and June 19th. It's so massive, ladies and gentlemen, nobody's priced that curve. Do you realize that? So what I'm saying right here is what's happening. There is going, we're in the camp, again, that one of the horses that's being backed inside Iran, you starve the beast for money when there's no there. Every country is a beast, an animal in its own way, good nor bad, okay? A country's a living beast, a living animal. If you starve it of food, you got problems, again. So when you're looking at this right now, there's 2 fractions inside that country. One side's going to win, and the one side that people are betting on, that horse, has got the same setup about what happened in Iran after Maduro was taken off the chessboard. When I used to rant and rave about the east and west side of the tranche, when we ranted and raved about what would happen before Maduro was taken out, before we spoke about that 2 weeks before, and why about the petrodollar, what was happening with gold, HQLA, what was happening against the dollar, the treasury system, the tax, why XRP is the anointed one, why ICP is the anointed one, why XRP is the anointed one, why HBAR is the anointed one, why these coins are the anointed one, and what's happening for their role in the new financial system coming. The petrodollar was under attack. It was fortified. You should look at what we're projecting. You will have the same scenario and outcome inside of Iran that you had in Venezuela. That is what this looks like when this is all said and done. We wager where we believe we will make alpha. That is why we're retained by the people that we're retained. Again, if You want to understand this? We're going to have this in our new financial news arbitrage in the Crypto Republic Dev's monthly section inside of our Patreon in the yearly version so that you could take advantage of this. Again, none of this is financial advice, just my opinion. But understand this, right? If this is where the world is going, you got to look at the map when we put up the maps. So oil just crashed double digits in a single session. Gold rallied at the exact same time. Some catalyst, opposition, reaction. If you understand why that happened, you're already ahead of 95% of the market. If you don't, you're about to spend the next cycle reacting instead of positioning. Because what happened on Friday wasn't just volatility. It was a full reset of the macro narrative. Again, everybody saw the headline straight at Hormuz opens. Oil collapses, risk on, stocks up. That's the surface level story. But the real story underneath that move, because oil didn't just drop, it repriced an entire inflation regime in a single day. Let's quantify it properly. 20% of global oil flows through Hormuz. The blockade removed roughly 10 million barrels per day. That pushed Brent up 10 to 13% during the disruption. The premium fed directly into global inflation expectations. So when that restriction's lifted, you don't just get cheaper oil, you get a collapse in forward inflation assumptions. And the market doesn't wait, it reprices instantly. Here's the exact transmission mechanism, step by step. Oil drops lead to energy inflation. Expectations fall. Inflation expectations fall leads to rate expectations fall. Rate expectations fall leads to real yields compress. Real yields compress leads to gold becoming more attractive. That's it. That's the machine. And on Friday, that machine ran at full speed. Let's anchor it with real numbers. WTI down over 10% intraday. 10-year Treasury yield compressed towards 4.23%. And 2026, rate expectations below $3.50 for the first time since early March. That last number matters more than anything because that's the market saying the Fed is no longer trapped on the upside. And when that belief shifts, gold doesn't hesitate. Now, here's where it gets interesting and where most commentary completely falls apart. Gold didn't just go up. Gold went on a risk-on day. Think about that for a second. Stocks rallied, oils collapsed, geopolitical tension eased, and gold still gained 1.5%, pushing towards 4,868. That should not happen in a purely geopolitical driven rally, ladies and gentlemen. Write that down. That's so important. Gold was just a fear trade. It shouldn't have dropped alongside oil, but it didn't, which tells you one very thing clearly. This is not a crisis-driven move. This is a monetary repricing. Let's zoom out, because Friday didn't create the gold rally. It confirmed it. The real driver is structural, and the numbers here are not sub. The U.S. is now paying over $1 trillion annually in interest on its debt. That's more than the entire defense budget. Think about that. Central banks have been net buyers of gold for 17 consecutive months. 17. It's not a trade. That's regime shift. And here's the constraint that ties it all together. The Fed cannot keep rates high indefinitely. Debt servicing explodes. Cut too aggressively, inflation risk returns. This is the trap. And when you get trapped, you drift toward financial repression, which means real yields trend lower over time. Hard assets get structurally bid. Gold doesn't need panic in that environment. It just needs the math to stay broken. Let's talk about silver, because this is where it gets even more interesting. Silver closed around 79.60, marking fourth consecutive weekly gain, roughly 4% on the week. But the key signal is the ratio. Gold to silver ratio, 61. That's tight. Historically, when that ratio compresses, it signals strong industrial monetary alignment. It often precedes acceleration, faces in precious metals. It's simple terms. Gold is leading. Silver is confirming. And when both move together, that's when trends extend, not reverse. Here's the part most people will miss over the next 2 weeks. Write this down. Gold's next move is not about gold. It's about oil, because oil is now the inflation switch. If oil continues to drift lower towards pre-conflict levels, March CPI 3.3% start to look like a temporary spike. PCE lightly softens. The Fed gains flexibility, and markets will front run that, which means gold doesn't need confirmation from the Fed. It will move before the Fed signals anything. Now, layer in timing. Stay with me, ladies and gentlemen, taking the PhD at a PhD, because this is where positioning matters. We're currently in the FOMC blackout period ahead of the April 28th, 29th meeting. No speeches, no guidance, no narrative control. That means markets are trading purely on data, plus positioning, plus liquidity flows. This is one of the few windows where price discovery is less managed. And historically, this is where some of the cleanest macro moves happen. So while most people are waiting for the Fed to say something, the market already moving. Let's map it out clearly. Scenario 1, ceasefire holds, oil stabilizes lower. Inflation expectations continue falling. Rate cuts get priced earlier. Real yields compress further. Gold pushes towards 5,000 plus. Scenario 2, ceasefire fails. Oil spikes again. Inflation expectations rebound. Rates stay higher for longer. Gold initially pauses, then rises. Oh, anyway. Why? Because both scenarios ultimately reinforce the same constraint. The system cannot sustain high real rates. That's the symmetry. Gold doesn't need perfect conditions. It just needs unsustainable ways and wants. Here's the real takeaway, and this is where the edge actually is. Friday proved something very specific. The downside in gold is now limited by structure, not sentiment. That's a big shift. Previous cycles, because gold needed crisis, panic, volatility spikes. Now it's being driven by debt math, rate constraints, central bank accumulation. That's a much more durable foundation, and it changes how you approach the market entirely. What to watch? If you tracking this properly, there are only 3 things that matter this week. The 10-year yield, watch for sustained moves below 4.2%. That confirmation of real yield compression. Oil prices, any continuation lower equals disinflation confirmation. That feeds directly into global forward rate expectations. 2026 horizon, below 3.5 is bullish regime intact. Ignore the noise, ignore the headlines, track the transmission mechanism. So when you see oil down 10%, gold up 1.5%, don't treat it like a coincidence. That's the market showing you very clearly that the war premium is temporary. The monetary premium is structural. And if you understand the difference between those two, you stop reacting to headlines and you start positioning ahead of them. Ladies and gentlemen, this is exactly what I'm talking about all the time. Again, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research, more importantly, how to actually position around all of this, come and join us. We're over 500 active traders and investors in the Crypto Republic Desk Monthly. Ladies and gentlemen, do you realize what's happening here? A lot. And these next facts are massive. 1.5 trillion deployed. Half of China's oil still runs through a war zone. For 20 years, China has been building global influence. 1.558 trillion invested worldwide. 806 billion into top 10 countries alone. Massive capital deployed across energy infrastructure, logistics. This is strategy. Look at where the money went. US, Australia, Brazil. It's resource plus stability. The Middle East, Africa, energy access. Europe, markets, infrastructure. A global system designed to secure supply chains. Despite 1.5 trillion deployed, 50% of its oil imports flow through Hormuz. 50. Let that sink in. It tells you all you need to know. Stop watching the Harry Houdini freak show. Stop watching the diversion and say, hey, Harry, you're not making the elephant disappear. It's still there. You just told everyone to look at the back and you went out the front. Again, China built global reach, but energy reality stayed regional. The Iran war changed the equation. Hormuz instability, direct hit to China. Gulf supply at risk equals pressure on refiners. Insurance plus shipping costs exploding. This is why China has been accelerating coal bill out. Would tell you that they're killing us with the AI war because it's a kilowatt battle. They're using coal, expanding pipelines, Russia, Central Asia, electrifying transport at scale, energy security strategy. Can China reroute fast, or does Hermes still control the system? Ask yourself this question. This is all you need to know. Stop paying attention to the Harry Houdini freak show. You don't got to play able with the tweets anymore. The tweets are nuts. It's designed to get you chopped up like sushi. Everybody will have a time where they do get chopped. Not totally up like sushi, because with money management, you could take losses. That's why your position sizes are small. That's why you could add. You can basically cut them. You can do what you got to do to get out of it. Because, ladies and gentlemen, the future for Iran, for which we think is going to happen, this is not financial advice, just what our opinions of people retain in any capacity. One of the 2 horses that are being bet on, we told you which one we think it is. Again, they will be running that country, and the country will be modeled after the Venezuelan model. That is the future for that country. It's not something that I like or dislike. It's just what the powers that be that are going to do. So because we have to live through this freak show, you might as well prosper from this freak show. And if you want to understand this, again, We're going to be going over the financial news arbitrage in the Crypto Republic Desk monthly section on a yearly basis. Come and join us and see, and stop reacting to news. Up, down, left, right. This sucks. No, this. So this is going to go on because of the world we live in. We went over this about the east and west side of the tranche. But more importantly, the commodity behind this isn't oil. It's polythene, the plastic in your bags under your sink, the lining in your cereal box, the caps on your water bottles. The most produced polymer on the planet, about a fifth of that world's capacity to make it, has been physically shut down. Another chunk is running on emergency. So effectively, there's not enough. 4 or 5 major supermarkets in South Korea that sold out of waste bags. Ladies and gentlemen, the difference in the spread's $1,300. You got to realize, someone asked me this in a comment. I'm going to answer it right now. The plays we're telling you right now, the long-term accumulation plays and the tips and the pits are all in play. And they're marvelous, spectacular, because nothing that's said or done is going to stop the shortfall, because the globalization supply routes are being disrupted for good. They're not going back to normal. So when you need sulfuric acid to leach out nickel in Indonesia for nickel miners, you need it for copper leaching. In Chile, in Northern Africa, you need these things. Again, you need it for silver leaching. It's going to affect everything. Fertilizer problems. This stuff's not going away. This is not going away. The world's changing. The only thing whether or not changes is your trading account. That's what you got to ask yourself. I can rant and rave about this all over and over and over again. But we're watching things that most people don't watch because it's boring. It's like watching the paint dry on the wall. But the people that retain us spending capacity, this is why they retain us, because their bank accounts grow. Not financial advice, just my opinion. You're going to see all kinds of disruptions. It's coming. The world is being changed. And whether or not you take advantage of the change is up to you. But again, there's one of those two leaders that from negotiations still alive. There was no ground forces in Iran to cause civil unrest. You have two camps there now that will go at each other. But let me tell you this, there's a lot more going on at play. A lot. And when you put the pieces together, it tells a story. It's a roadmap to success. Why we say XRP is the anointed one, ICP, H-bar? Look where the world's going. So most people are going to, why didn't the candle go, why is it not at 1,000? Not going to do that overnight. But as this plays out, the world changes. The people got that Gucci clarity, that Gucci conviction, walking up that frosty mountain with your frosty beverage. The view from the top is magnificent. As financial mercenaries, we wait our whole lives for opportunities like this. Opportunities where we know what's going to happen and why. And once you know why it's going to happen, it's not so hard if someone shows you and guides you from point A to point B. So you got two options. You got two options. You know what those two options are? You can do nothing and complain and comment on this video on some AI slop. Or B, you can join the ranks of the other financial mercenaries who join the Crypto Republic Desk monthly, who want to learn to take advantage of this, who realize that this is a once-in-a-lifetime opportunity to build enough capital to actually roll over into crypto, because they're telling us what's going to happen and why. In the beginning of this video, if you're still here, I salute you. This is the best part of it. Who's getting the information about those shorts and why? Most people don't even know that. There's a logic behind all this. And the people who take the time to actually understand what's happening underneath are the same ones positioned before the next move begins, because this time it's obvious. It's obvious. You want to stay ahead how this evolves is exactly what we're tracking inside the Crypto Republic Desk. Real-time shifts, positioning, how to navigate it. The goal isn't to react, it's to be positioned before. One good tip pays for your easily entire year subscription. If you want the deeper macro research and learn how to take advantage of all this, come and join over 500 active traders invested in Patreon. But stop trying to time the market. You time the ability of how long you're in the market. The only thing that's guaranteed is death and taxes. But nothing has changed on a structural standpoint of what's going on. The blockade's there. The only thing that changes is there's going to be conflict inside of Iran between two groups going at it. How long can they function when there's no revenue with oil? What China does with the sulfuric ban. How long that affects where other countries mining companies can get what they need to leach nickel, copper, silver. It's all there. And even more exciting things. Again, I mean, the backwardation in the oil market's insane. Ladies and gentlemen, with that being said, I want you to enjoy your Saturday. We're going to have a video for you tomorrow. But understand what I just said and why. And Domenico and myself, we're so excited to release the financial news arbitrage to the yearly members of the Crypto Republic Desk Monthly, because this is really what family offices see and why. The grounding out, the logic behind what's happening and why. Actually, how the narrative's driven to make money off of it. It used to be with Dick Cheney, Halliburton, how they got all those contracts. For years, people have taken advantage of chaos that's man-made. And yes, the man-made chaos is terrible. I don't like war. War's terrible. It's terrible, but we got to live through this. So if you're going to pay more money for your steaks, you're going to grill. You're going to pay more money for RBOB when you fill up your gas tank. More money for diesel. You got countries that are going to run out of diesel in a month. If you're in Australia, you got issues. If you're in the UK, you got issues. A big shout out to all the Wolfpack members worldwide. If you're in the United Kingdom, if you're in Australia, if you're in the Netherlands, if you're in Germany, if you're in the United States, Canada, we love talking. We love your comments. Tell us in the comment section where you're from, but this is what the world is today. So you can prosper right alongside the crazy people that run the world. We've been doing it our whole lives, not financial advice, just my professional opinion and anybody that retains any capacity. So watch the headlines, watch the news. I don't like trading crypto over the weekend. It's more of an overreaction. Watch the lines, the resistance and supports, the extreme lines. That's the biggest thing. We're in the what-if forest, and inside the what-if forest, the biggest gains are to be made. Don't get caught up like sushi. Keep your Gucci clarity. Keep your Gucci conviction. As financial mercenaries, we prepare for this. There's a reason we prepare for this, because we want to come out on the other end a winner. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decision. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves that it'll never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up to the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story, it's just the beginning. If this opened your eyes, smash that like button, ring a bell, leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you context, clarity, research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. We'll see you in tomorrow's video.